figure masks these huge differences you can see here. The Eurozone, it says, will shrink by about 0.2%, but China, its growth improving, at least on its performance this year, 8.2% it's predicting for 2013. But at least as far as Europe is concerned, the chief economist saying that those growth figures not enough to make a dent in the unemployment rate. And Olivier Blanchard also said that it continues to be Southern Europe that's the worst affected.
We forecast for European periphery countries that we forecast another year of recession. And you've seen the numbers from the document, minus 1% for Italy, minus 1.5% for Spain.
Well, the IMF isn't the only organisation giving economic forecasts. COFAS is a company that offers credit insurance to protect companies from the problems of clients not paying their bills. And that knowledge they have of the global economy and how it's working means that they can also give pretty good forecasts of likely trends. Well, every few months, COFAS publishes a list of how creditworthy different countries are. And we're joined here in the studio by Yves Zlotowski. You're the chief economist at COFAS. Thanks very much for joining us today. Now, I'm interested to see that in your latest assessment, you've downgraded both Spain and Italy to a B. Now, I wondered if you could just tell us why that is.
Well, already in 2012, we have seen non-payments from corporates in both those countries really deteriorating very quickly. And we expect that this year it will be again a bad year for a series of reasons. First, the macroeconomic environment will be difficult. The IMF told that South Europe will suffer. Yes, we also predict recession in those countries. And secondly, there is a specific issue for corporates. We have seen with the banking reform in Spain and with also the beginning of troubles in Italy, we have seen banks cutting their credit. So the access for corporates to credit will be much more difficult in 2013. So all these elements tend us to think that again in 2013, credit risk for corporates will deteriorate in those countries.
And what do those assessments kind of tell us about the world's economy, if you like?
Well, what we see is that clearly the world is becoming more and more different these days. When we see really Europe trapped in this recession, and what's really striking is that everybody sees. Some people say that the crisis is finished in Europe in terms of systemic credit risk, in terms of financial risk. But when you look at the real economy, the corporate side, it's still extremely difficult, not only in Spain, but also in France, for example. And on the other hand, in emerging markets, we have seen growing acceleration. We see corporates more and more transparent, more and more open, and that's also improving credit risk. So we clearly see two divergent trends, in fact.
So we saw those forecasts from the IMF. China, they said around 8.2%. I know you've got an overall prediction for emerging economies, but I just wonder what sort of divergence do you have for all these different economies that are in there?
What we see globally is that for Asia, we clearly see some improving risks, especially for ASEAN countries. We have seen they've been the big winner of this post-crisis period. They've been so resilient. Look at the growth in Indonesia and Philippines. So here we are optimistic in terms of credit risk. But we see in some countries some specific risk, and very often it's linked rather to the political climate. India, for example, South Africa with a lot of social tensions. And this is where I think the challenges are for emerging markets. It's not so much growth anymore. It's much more social, political tensions, demands from the middle class, and the fact that the governments are not always able to meet these demands.
Have you downgraded your assessment for India, for example?
Yes, India, we feel that the model has a problem. First, there is a very simple issue in India, is that the corporates are very highly leveraged in India. So, of course, when the growth decelerates, when there is volatility of the currency, it's difficult for corporates to pay their bills. And we have seen a lot of demonstration in India, and we feel that the country is more and more divided. And you have seen, of course, at the beginning of the year, the corruption issue. Then now we see the rape issue, which has turned to very violent demonstrations. And we see that the government is struggling, in fact, in implementing reform. So we feel like the Indian model, in a way, is put into question.
Okay. And I just want to ask you one last question about France. I also saw you downgraded your assessment for France. What's going on there?
Well, it's clear that in France you see very fragile corporates. They have a very low profit, very high dependency on credit. So, and we believe that this year there will be a recession in France. And by the way, French corporates are very, very dependent on household consumption. And we believe there'll be a slight contraction. So we believe that bankruptcies in France will increase a bit.
Okay, Yves Zlotowski, Chief Economist at COFAS. Thanks very much for joining us here at France 24. Well, let's get a bit of a markets update as well, shall we? And on Wednesday, the markets in the US at least had a pretty good day. There were some decent company results. Also a sense that Washington is getting a grip on its debt problems. The major indices all closing up, as you can see there. The House of Representatives as well passed a bill to extend the country's debt limit until mid-May. That takes the pressure there off for a while. And I can also give you some data out of Asia, Stuart, this Thursday. First from Japan on its trade deficit. That's hit a record high. It was at 6.9 trillion yen. That's 58 billion euros. And that's because of plunging exports to the Europe area, which we just heard about, is struggling a great deal. Also problems with China because of that territorial dispute. And staying in China as well, some better news on manufacturing there. We get this regular data called the PMI. Now, anything above 50 shows that activity is increasing and quickening. And you can see the January figure there up on December. And actually that figure, the best for 2 years.
What about the Asian markets then? They're really reacting to that.
Yes, now they've been reacting to all sorts of different information. So we've seen a bit of a seesawing of things. The Nikkei doing pretty well this morning, 1.3% there. Now that's because the yen dropped, helping exporters. But the Shanghai Composite having a worse day. The others all falling back.
Let's come back here to France then now, shall we? Angry workers in the car industry have been protesting, haven't they, on Wednesday?
Yes, and there was a lot of anger when a group of workers from Peugeot Citroën, big French car company, broke or forced their way, you can see here, into a car plant owned by Renault. There they are, the two teams of workers joining up. Now that's because they are both struggling, they say, against plans to cut jobs as those companies struggle with slumps in their European car sales. Now, when it comes to Renault, blackmail is the word that's being used by unions there. That's how they're describing plans by the company to increase working hours and freeze salaries. Now, Renault disagrees with that assessment. It says that what it's trying to do is improve competitiveness and save those French plants. Well, Claire Murphy has this report.
Scenes of industrial unrest once more in France's troubled car industry. Striking workers at this Renault factory northwest of Paris were joined on the picket line by workers from rival manufacturer Peugeot. They want to show support for the employees engaged in a face-off with management. There have been walkouts at many of Renault's sites, and in the latest developments, unions claim they have documentary proof they're being blackmailed by company bosses, who warn at least 2 factories will close if workers fail to agree cost-cutting measures. The company is asking for more workforce flexibility, increased working hours from 1,500 annually to 1,600, a wage freeze and a loss of 7,500 jobs.
It's blackmail. It's shameful.
If you don't sign, you're fired.
The French government yesterday lined up alongside the workers. It retains a 15% stake in the car maker.
We won't accept any hint of blackmail. That's what we've said before.
The company, though, strongly denies the use of heavy-handed tactics.
During normal negotiations, you discuss things, but every time you make a demand and there's the downside of having this rejected, and then it's presented as blackmail, then there's no negotiation possible.
Renault has forecast positive cash flow for 2012. But last week, the company also reported a 6.3% fall in sales last year to 2.5 million units, due to a 1/5 collapse in European orders.
Thanks, Matthew. Matthew here with a little bit of a slightly earlier business here on France 5.